It's live, honey. No more crazy here.
Well, thank you, though.
Mister, what can I bring for you on this glorious afternoon?
Well, Hector, here's the game plan. You're gonna bring us 2 absolute martinis. You know how I like them, straight up. And then precisely 7 1/2 minutes after that, you're gonna bring us 2 more. Then 2 more after that, every 5 minutes until one of us passes the fuck out.
Excellent strategy, sir.
I'm good with water for now, though. Thank you.
It's his first day on Wall Street. Give him time. Thank you.
Thank you. Mr. Hanna, you're able to do drugs during the day and still function, still do your job.
How the fuck else would you do this job? Cocaine and hookers, my friend.
Right. I gotta say, I'm incredibly excited to be a part of your firm. I mean, the clients you have are absolutely...
Fuck the clients. Your only responsibility is to put me on the floor. You got a girlfriend?
I'm married. I have a wife. Her name's Teresa. She cuts hair.
Congratulations.
Thank you.
Think about Teresa. Name of the game? Move the money from your client's pocket into your pocket.
Right. But if you can make a client's money at the same time, it's advantageous to everyone. Correct?
No. Number 1 rule of Wall Street. Nobody. Okay, if you're Warren Buffett or if you're Jimmy, nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers. Right? It's all a fugazi. You know what a fugazi is?
Fugazi. It's fake.
Yeah, fugazi. It's a wazi, it's a woozy, it's a fairy dust. It doesn't exist. It's never landed. It is no matter. It's not on the elemental chart. It's not fucking real. Right? Stay with me. We don't create shit. We don't build anything.
No.
So if you got a client who bought stock at 8 and it now sits at 16 and he's all fucking happy, he wants to cash in, liquidate, take his fucking money and run home, you don't let him do that. Because that would make it real. Now, what do? You get another brilliant idea.
Alright. So that bit there is the most hilarious part. That's the most true part of that scene. The cocaine hookers is very much 1980s. But the don't let him go home. Got another brilliant idea. And that's the thing about trading, right? I mean, you literally become addicted to the trading. It's the idea that you can make money again and again and again and again. Well, it's a pretty dangerous idea, but it's a pretty real sort of habit, right? That people develop. I mean, I think the next part of that scene is that they talk about. Let's see what the next part of that scene is.
A special idea.
A special idea.
Another stock to reinvest his earnings in himself. And he will every single time because they're fucking addicted.
Because they're fucking addicted. It's true. It's true. I mean, look. So, how do you stop yourself doing that, right? I mean, how do you stop yourself getting from trade to trade to trade? If you've been watching the stream, you would notice that we've gone from dollar Mexican to long Aussie Kiwi was the first trade a couple months ago, to the short dollar Mexican trade, and then this week we've just been punching long dollar yen. And it's for every day you're going to see a new trade, new idea. And if you're making money, it's fantastic. All right, but there is something to be said about having breaks. All right, because this Ferris wheel does not end. All right, it just keeps on going. And eventually you're going to take some hits. So what trade went wrong in the last 2 months? The short euro pound trade that we had. All right, short euro pound, I think we got in on this level here. Market came back down, we're like kings, and then market went up. We're like, oh, we should take a stop. Took a stop on that ridiculous rally up there, right? But what we're talking about here is that it's the Ferris wheel which got us onto that next trade, and there's no way you can keep every single trade idea at the same consistency, at the same level, at the same sort of high risk reward that is necessary to make money long term. So I'm a big fan of taking breaks from the market after winning. I'm a big fan of slowing down trading after winning, and I'm a big fan of taking little breaks after losing. Not big breaks after losing, because that's extremely hard to do, and it's not something that really is realistic. But some sort of reset is needed every now and again, because otherwise it will never end. Like I was thinking about the other day, I had 12 months stretch without no trade on, like a 12-month stretch without a day without a trade on. Okay, that's just sort of fucking crazy, right? That's just I mean, obviously the market's not moving on the weekend, but that's just relaxation until we get back to the Monday, right? And it's not going anywhere. Same ideas, same sort of game. Everything's going to be around when you come back in 2-week break. And that sort of break can let you refresh your batteries, yeah? It's a very important sort of thing that you have to do as a trader. I always wonder why my trading goes ups and down and then has some sort of flat periods, and I think it's because I do end up just falling out of love with the game, but just not taking it as serious as it used to be when you're fresh into it. Okay, I mean, it's like the selling of the Kiwi, right? The selling of the Kiwi. 3 weeks ago, when we were buying Aussie Kiwi, it's all we talked about. There will be some eventual correction here in the Kiwi, and we're going to see a big move down towards the 200-day moving average. And you can check this stuff, right? If you watch my streams, you know what I'm talking about. So we've been talking about selling the Kiwi for literally months. And then when it eventually happens, we're so sort of fatigued about it that we make our money on that initial move down, and then we let the rest of it run without taking any advantage of it. Now, what is that about, right? What happened there? It's almost like you got fatigue of that story. Almost like that story wasn't fun as it came true, right? And there's a very big difference between analyzing the market, becoming a trader, and making a lot of money from the market. Yeah, making a lot of money in market requires you to think in a certain way, which is not so much a trader's way of thinking. Managing a trade, your trade ideas, your stops, your entries and everything. Sometimes you lose sight of the bigger picture, and literally all it takes is one big trade on the right pair for 500 pips to make the trade that you need, to make the money that you need for the year. So at the end of the day, right, that's literally what you want to be doing. All this risk reward stuff, all this small term trading, I mean, that's one thing, that's one way to do it, but it's much easier to be so immersed that you see the future and then make that one trade which makes you that 500 pips, and that makes you your 50,000 or something, right? And that's not that hard to do, but it is a little bit not what we're built to do, not what they teach you in the books. All right, but it's some of my trader friends who are big traders, and they trade million plus size deals. That's literally how they make their bread and butter. They churn a lot of the year, but then there's that one trade where they fully saw it and they let it run to completion, and that justifies them being in the market because they make so much extra pips. You know, in poker world, back when I played poker a lot, you know, it's basically like winning a tournament. You can pay hundreds of entry fees, get, you know, 100th place, 10th place, but really you only get paid out with that first place. So it is very important that you can let a trade run, you can build into a trade, and you can take money from the market. I know that a lot of you would have had a situation where you've added to a losing trade aggressively, let the market run, broken all your risk management rules, kept on adding to it, and end up losing $30,000, $40,000. Okay, now that same thing can happen if you literally do the reverse, but it's only 5% of us which have done the reverse. Now, I've only done it myself once or twice. Okay, but it is literally the thing which gets me out of bed to do this trading game. You know, the ability to do one of those trades again is why I'm here. It's not so much the $1,000 stuff that you can get from the one trade. It's letting a trade run, building a big position, and then seeing the market crash. Imagine if you were a pound bear before the pound crashed. That one trade, you understood the future there of the Brexit and how it's going to be complicated, and it was going to be hard for the government to get through any legislation, and as soon as they start negotiating, there's just going to be endless pressure. You know, imagine you were an old hat in the game and you knew how political pressures affected the pound, and you knew how big a deal it was. All right, now, you know, I didn't see it, but maybe some traders saw it and there was just heavy selling into it, adding to positions, adding to every rally, and then got paid off on the collapse. Okay, that's it. You're done for the year. You know, no other profession pays like that, apart from, like I said, like poker. If you win a poker tournament, you're done for the year. A big poker tournament. So, I mean, it's an interesting game. People don't talk about this much, and I don't talk about it much, but you have to get paid off every now and again, heavily, right? You have to make that big win. You have to let trades run. Now, do I think there is one here? I do. The price action that we saw a couple of weeks ago with the dollar yen starting to rally on the back of nothing, breaking the sort of downtrend that it's had for a while, and the sentiment it's had for a while, and the amount of buying on the dips that it's seen in the last week, that's like a secret little tell, in the market that something's up. Big money shifting. It doesn't happen with a bang, right? Big money shifting. They like to lean against the market's trends, lean against the market's feelings. But for me, this one is one which will rally up to at least 107, probably 110. Okay, now, what is the catalyst for this? Alright, I think the catalyst is, and why the money's moving now and why the bond market's moving, is that the Fed's going to go ultra hawkish very quickly to get the market ready for the December rate hike. Right? And they're going to go ultra hawkish in the next couple of minutes. Next couple of weeks. Right? So that gives a whole month for the market to be ready. And Yellen could begin this tonight. Right, so the whole rant there is about this dollar yen trade. Why does it make sense to me? Because it's the cleanest play against US yields. It's the cleanest play if the US is raising rates, and Japan has stated that they're trying to do more. Okay, so I really like this trade. I'm going to be remaining with my long dollar yens that I have. Hopefully we can get some significant upside there. I'll be adding 2 tips, and it'll be the trade that I try to make enough to justify myself as a trader, rather than just your normal 100 pip sort of rally. Try to get the 500 pip gains. I mean, you try and find out there a trader who goes for those 500 pips regularly, right? It just doesn't happen. And I think it really is something which can add some extra positive expectation, positive EV on your trading. Yeah, I mean, look, if you don't know the market, you might be into selling pound yen right here, right? Just thinking that it's got a lot more room to move. That just means that you basically don't understand what's going on here. All right, the pound is stabilized. The dollar yen is the big mover. It's not the pound yen, it's the dollar yen which is moving. All right, so it's the one which is going to be pushing the euro yen higher, pushing the pound yen higher. Now pushing the Aussie yen and the CAD yen against the majors. So yeah, dollar yen is a beast, and it really plays nicely, and it's pretty hard to understand sometimes. But a lot of what it's to do with is not technical. It's to do with what's going on with the U.S. yield relationship between the Japanese yields and the U.S. yield, and right now they're surging. So it's time to get involved in that. By the time you flip to be long by it's above 105, you're a little late to the party. All right, so what's the other trade that we're in? We're in some little bit of Mexican. This is Trump losing the election trade. This trade makes sense, and this is one I could have gone on larger in, but I didn't. I didn't have the balls, and I've never traded it much. But it makes a lot of sense, and it looks like it's going to come through. And so far, it's doing quite well. Dollar Swiss is
incoming mail.
Oil expires tonight, guys. That's what that mail's about. No, oil expires on Monday, sir. Some people might have the same view here on gold. Gold might be breaking down to 1,200 a barrel, 1,200 an ounce. Now that is still significantly further, but obviously these people have been selling above 1,300, and there was some crazy sort of relentless selling going on above 1,300. That was a little surprising in the market to me as a trader. When I was watching, I was like, oh, that's a bit weird. And then as we came back down towards that 1,300, we're talking in stream about the chances of it breaking and what would happen if it did. All the stops that have been built up for the last 5 months would be taken out, and that's basically what happened. So yeah, if you're playing that, that's similar to what's going on with the dollar yen. If you're playing that Yellen's going to turn ultra hawkish and the rest of the Fed speak is going to come out ultra hawkish, just to cement the December rate hike, then you should be long US dollar. You just got to pick your poison. Euro is another one. Now this plays upon the theme that the ECB is going to be dovish and extend tapering, and that the Fed is going to raise rates. So let's have a little look at that. We broke 110 last night, came back up, little rally, nothing to change the market's tune. I suspect we're going substantially low. So yeah, we've been long US dollar against everything, but the pound itself, because it's oversold, means that there is a historical relationship between dollar yen and pound, and that could support the pound. There is a relationship between euro selling and shorting euro pound, which supports the pound. So the pound by itself is not a good one to sell against US dollar strength, and the pound at 122 is not a good one by itself to sell at the US dollar strength, because the theme is hard Brexit, and the market has fallen 1,000 points on that. Now, you want the market to keep on selling even after complete capitulation there. That's a little bit dangerous. So in some scenarios where there's risk off trading and stocks are weak, then selling the pound makes sense. Just continue to sell it. When stocks are strong, when dollar yen's strong, generally you don't sell the pound. Yeah, it's just asking for trouble. So we did pick up a little bit of long Dow earlier. That was mainly because of the movement in the Nikkei. I just suspected that we've got some pickup here coming through. So I like that long earlier today, and we're kicking a little high here. 18,300 is the target. It's not a long-term trade. It's not a trade with conviction. It's just a short-term making money trade. Making money. Maybe 18,250 on the futures market, sorry. Yeah, so looking for the big winner is going to be my game. I sort of lost it. I should have had it with the Kiwi, but I gave up too early. Not gave up. We had a little bit of a problem there with the Aussie Kiwi for a while. But, you know, that's sort of things lined up against us psychologically. Yeah, no. Gurung, that's happened a lot to me, mate. Don't give your details to everyone. You get called from every new broker. Your name and details have been given to obviously some sort of list that's been sold on, and so every new broker that comes through, the big hard call. Cold called, just straight up. I thought you were. Thought you're in the market there, mate. Alright, let's have a look at some of the data out. Some of the banking reports tonight. There's a few out from on the UK yields actually. So what's going on in UK bond market is very interesting. Okay, so there's been selling of gilts and selling of the pound. That's not normal. That's not normal at all. So what we're seeing right now is some banks are starting to talk up the chances of no more easing from the BOE, and that the weaker pound is going to spark a little bit of inflation coming through. So let's see what they're going to say here. This is Morgan Stanley. Will the UK have to tighten policy? So obviously the Bank of England wants a weaker pound, but they don't want too weaker pound. And at the end of the day, it's how fast the pound falls. And the pound's definitely falling fast. They're comparing the UK to emerging markets because of the amount of money that's moving in and out right now. That's hilarious. Which is important to do though, just to get the general trends that come with this. Wow, these guys are pretty bearish. So I think a U-turn EU soft axis is only a 10% chance here. I think they're going to get to the stage of being like Canada. Alright, going to have to learn about that. Norway's got really privileged access. Let's just do a quick market check, boys. A few of the traders are getting killed in the room, fighting the market. You've got to stop fighting the market. It's letting you know where it wants to go. I would like to sell some euro. If I was a little bit more on the game earlier today, I would have sold on that rally on the euro there. I think we're going to break down pretty comfortably below 110. You definitely don't think the Bank of England is going to save the pound, that's for sure. It's the market which will save the pound. It's the market which will say that's enough, right? The Bank of England loves this. But careful what you wish for. If they get some sharp inflation, then you are going to see some hawks come out regarding buying pound. Alright, just one sec, guys. I'll be back in one moment. I'm just going to look at some technicals there. When I do get back, mainly we're going to look at some euro technicals. And then we're going to see if there is a few, thank God it's Friday, reports out. We were basically looking for the Jim Reed one and maybe another technical today. Keep it in the technical family. Alright, boys, back. Yeah, no, I was just settle down. Ducted. Can't leave the room. Can't leave the room for a couple minutes. No. Long Kiwi. How well? Now, we talked about this, mate. We talked about this secretly in the past. We're not supposed to be talking about this. After the RBNZ cuts, there's some definite opportunity to get long the Kiwi. The target level that we're looking at is 69.50 to 68. That's the target zone that we're looking to buy. Well, let me bring that up for you. Okay, now if we can get in here and the market does a little U-turn, then I would be happy to see us go back towards previous highs. 73, 72 first. Okay, but this is a sneaky little trade that's in the background, right? Let's not get involved here because the market's still got a couple hundred pips to move, potentially. But it's still going to be the highest yielder. It's still a very strong economy. And it's only been talked down because of the RBNZ in anticipation of a rate cut. So it's a wildly telegraphed move. It took a long time to come. Market's been wiped out here, the longs. Then they will rebuild. When they rebuild, and they're relentless. It's a potential 500 pip move, yeah. We can get on the backside. Very hard to see the Fed going ultra hawkish for next year. I think the market will react pretty negatively generally to the US rate hike that comes in December, in the January or February. But we'll see. I mean, we'll see how it plays out. Market's not going to expect them to raise again in March, right? Unless they do too good a job of talking up the December rate hike. Yeah, so I'm not too keen to get involved just yet. But yeah, definitely longer term carry trade is always appealing. And if you get some nice little Euro Kiwi selling levels, we can get involved in that. I don't know if I've got a Euro Kiwi here. Yeah, I mean, if we get some nice Euro Kiwi levels up towards, say, 160-ish, ooh, would be some good little sell. So let's see what it gets to first before we get too excited. But we want to see the final clear out, right, of the longs, because that's the market move right now. We're on the way down, not the way up. You don't want to start buying just because it's cheap. Pound taught you that, right? Dollar yen. This is written yesterday. Doesn't show the market rally here. Key top side 104.10. We're above that. 104.60. Next one 105.60. So this downward trend line's been holding for years. Let's see if that comes into play too. I mean, people just don't know that the dollar yen can be at 110. They just don't. They underappreciate how it can move. They underappreciate. They've forgotten the 120s that we're at last year. It's just, it boggles my mind that people can't see the potential rally here. And I don't know what that comes down to. It's like, do they not see the US dollar strength, the Fed rate hiking? Did they not see the constant jawboning? I mean, yeah, there was relentless yen buying going on, but that seems to have abated. And it can abate. It can abate for 6 months. Dollar Swiss, pretty key little break here at the same time that we had the euro fall. So, look, you can either be a euro seller or you can be a dollar Swiss buyer. They're very similar trades. I don't mind dollar Swiss. All right, I'm long dollar Swiss. It's one of my trades that we've got going on here. About a lot. It's one of my main trades. I like it, but when you're trading it, you want to keep an eye on the euro, of course, but also the euro Swiss, because the euro Swiss is the major of this pair, not the dollar Swiss. The euro Swiss is. So what the euro Swiss is doing is very important for the general outperformance or underperformance of the dollar Swiss versus the euro. So euro against the US dollar. So, you know, if you selling euro is the same as buying dollar Swiss, then the only difference is the euro Swiss cross. If the euro Swiss cross is in a rally, then we're buying dollar Swiss because we're going to get 100 pips, whereas the short euro is going to give us 80 pips relatively. At the moment, it's not very clear, so you can be either. But if we're down at 108, then we'd be looking to buy dollar Swiss rather than sell the euro. Now that is something I've said 100 times. Probably people still don't understand what the fuck I'm talking about. But hopefully you do. If I say it enough, maybe you'll get it. It's buying. They're linked via their relationship, which has been built up via the euro Swiss peg. And that relationship still holds. So until it doesn't hold, then I can buy dollar Swiss as a substitute for selling the euro. So euro Swiss traders actually care what Draghi says. Now we're going to be talking more about that the next week. Next week is all about the ECB. ECB taper or not taper. Taper or not taper. So it's going to be a heavy week next week. There's a lot of stuff coming up. Pound CPI, UK, Chinese GDP, ECB meeting. All this is very important for what goes on in the market for most of our trades here. So really, you got to be on the ball next week. I'll try to give you as much update as I can, but you know, just keep trucking. Keep the US dollar train going. Yellen comes out hawkish tonight. Ooh, we got ourselves a party next week. Where we're heading back to 704, 765. Yeah, this guy's cheating, stealing our ideas. That's the 200-day moving average there, 69.43. We'll be looking to potentially buy there. Dollar CAD very hard to trade. Just leave it alone. Euro Swiss buying, but Euro Yen buying, but it's not cleaner than dollar Yen buying, so it's not clear. All right, guys. Any trades that you want me to look at tonight? Otherwise, tomorrow we'll on Monday we'll come through and we'll look at a few different preparation trades for what's going on next week. You should already look. If you don't know what's happening next week, let's just show you, because it's very important if you're trading that you keep up to date. So straight away tonight we've got Carney, we've got retail sales, we've got Yellen, but next week we've got New Zealand CPI, critical. RBA low speaking. Oh, okay, that's important, but not as critical as New Zealand CPI. We've got the pound CPI. Wow, monster stuff. US CPI, don't underestimate that either. New Zealand GDP price. Ooh, global dairy auction. Chinese GDP. Wow, big data. Wage growth data out of the UK. Huge. Bank of Canada statement. Post OPEC meeting. Important. Unemployment data. Tier 1 Australian data. Important. Pound retail sales. Real on the ground data. Not PMI data. Important. ECB, taper or not taper in March 2013. Critical. Alright, so it's not so much US dollar, it's everything but the US dollar next week. But very important. Alright, guys. That's enough for the Friday night. You guys have a great weekend. I'll be back to 9 GMT on Monday. PM me if you want me to look at a particular chart. I will definitely do it for you. Otherwise, trade safe.